All right, hi everyone, and welcome to day two of our Synergy Traders number 56, our seventh annual Women Teach Trading and Investing conference, live on TimingResearch.com. So this is brought to you by TradeOutLoud.com and TimingResearch.com, along with our co-sponsors OptionProfessor.com and MadHedgeFundTrader.com. So, of course, all of these presentations are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor before you trade and only trade with money you can afford to lose. All of these sessions are being recorded individually, and um, they will be available on TimingResearch.com as well as the Timing Research YouTube channel. So to open the day for us, we have Alaina Nicole of InvestingBay.com, and I'm going to go ahead and turn it over to her.
Thank you so much. Good morning, everybody. I'm Alaina, aka Investing Bay, but mostly just Alaina. So I've been trading full time, coming up on 5 years, and I love the S&P 500. So what I want to do with you guys today, usually this is like a 2 week long series I do, but I've kind of hacked it down to fit into our hour. And so before I get into we'll get into the chart like towards the second half because I do want you guys to see some live price action, but I would be remiss if I didn't cover a little of the backstory because the S&P 500, whether it's SPY or SPX or futures or however you want to attack it, I just think the fundamental piece is so important to understand, at least, and again, this is not going to be a full on deep dive into the economy, but I do want you guys to have a little bit to go on so you can research more and learn more about it. I do like to start all my sessions off with an affirmation just because I think trading, it's very important to have intention. And so our affirmation for today is going to be, I will not risk it all. And I hope you take that with you in your trading and don't feel like you ever have to put all your capital at risk because our first priority is always going to be defense and protecting what we have. So, of course, we have our risk disclosure. Invest responsibly. There is risk involved with the S&P 500 as with any other securities, but especially over here, you guys, they call the SPX the widowmaker. So just be mindful of that. And none of this is going to be considered financial advice. But yeah, let's get into it. This is one of my favorite tickers. I love the SPY, I love the S&P, but I'll show you guys how I like to chart her up. But first, we'll get into a little of the backstory. So the S&P 500, it is actually 505 of your American companies, right? The biggest movers. So the cool thing about the S&P is it's an index. And so periodically, they'll take out people who aren't performing as well and they'll add new ones. Typically, when those things are taken out, you'll see the stocks take a dive because that's a bearish sentiment. And just like when you see them get added, you'll see sometimes the stocks will run because that's a bullish sentiment. They're going into that index. So again, it's one of the most widely followed indices. It's pretty much the benchmark for the economy, how the S&P is performing. She's very sensitive to economic reports and data. Like tomorrow we have GDP. This morning we had our durable goods. I think next week we have unemployment. So one of the things that I like, and I tell my students is make sure you have three parts for every trade, right? You want to have volume, you want the price action to make sense, but you also want context, right? During your day-to-day trading, you'll have a lot of noise. And so a lot of times to give you that momentum that we need to see these, and I'm predominantly an options trader, but I know there's like, people who do shares and things like that, futures. But either way, we want to see momentum and we want to have a reason for this movement, and that oftentimes gives us a little more strength in our price action to support the directional moves. All right, so again, it's a weighted index, right? And it's based on market cap. So our market caps, they do fluctuate, but the big hitters they're just the big hitters, right? So like your Nvidias, your Apples, your Microsofts, these are going to be heavily weighted stocks in this index, as well as like your Amazons, your Teslas, your Googles. And so understanding how those heavy weighted stocks impact the index is important. So even if I'm just trading SPY or SPX or I'm watching futures, I'm still going to make sure that, these tickers are trending. Hopefully they're trending all in the same direction because sometimes if they're doing different things, right, you might have company specific news it can actually make for a choppier environment in your index. All right, so all your sectors are going to be represented in the S&P 500. We do have our 11 sectors. Our biggest weighted sector is going to be tech, right? So a lot of times I like to watch the Qs and the NASDAQ as well because I believe last I checked, it was over 30% of the S&P 500 was tech weighted. And so that's a big chunk. And so tech is definitely, driving the car, but you can have some other indices, or not indices, excuse me. You can have some other sectors that are, maybe they have catalysts, things like that, that can drive the index as well. But my day to day, I'm definitely watching tech. When we get into my chart, let me make myself a note so I can show it to you guys. I do have a watch list of all the spider stocks, just so I can kind of eyeball the sectors throughout the day without having to like look at every individual ticker because that's overkill. And so one of the differences, or one of the things I want you guys to be aware of too, if you're not already, is the differences between SPY and SPX, right? So basically ES, right? That's the S&P 500 futures. That is driving the car here. So that's like the king granddaddy. S&P or SPX is, your next level down, and then you've got your SPY. And so with SPX, this is almost like a phantom ticker, right? There is no underlying assets versus SPY actually pays a dividend because it holds in that index, right? It's an ETF. It holds those dividend paying stocks. And so SPY pays out their dividend, SPX doesn't have one. SPY, you can exercise that. SPX, this is going to pay out in cash, right? So you can actually get SPY shares, they're tangible. SPX literally just tracks the the S&P, but there are no assets to hold physically other than SPX itself when it expires. So SPX is 10x the value of SPY. It does have tax benefits. I won't go down that rabbit hole, but like the 60/40 rule, things like that, that apply to SPX. So you actually can get a break on your capital gains. And yeah, I've traded both of these. I think options wise, the structure of the options are very, very different. SPX is typically a little more expensive. Also, um, it had the time decay, right? And we'll talk about that in a second. But the time decay on an SPX option is going to be gnarly. So I always tell my students when we trade this, it's like hot potato, right? We're in and out. Those little quick bursts of momentum because, like I said, she giveth and she taketh back. SPY also has a high theta, but it's not as gnarly as SPX, right? So, and these are a little more affordable to buy time on, things like that. I personally, especially for new traders, I think SPY is a better place to start. Maybe even like an IWM, but we're not talking about her today. But just to get your feet wet, right? I don't recommend anybody getting started on an SPX. It's just a gnarly trade. So sentiment is huge, right? And this is going to be like overall market sentiment, not our personal sentiment. Um, Trading, like our egos, we can't have that, right? Our ego has to go. It has to just be us being humble to the market and just, I tell my students, it's almost like doing like a coordinated dance. The market tells us what moves to make, but if it doesn't give us any instructions, then we sit on our hands, right? So bullish sentiment, and again, economic reports, maybe you'll have like yesterday, right? Tesla rallied into close. Actually, a lot of stocks rallied into close, but you can kind of see the indexes move with those. So those are things that you can keep your eyes on as well. And then also the bearish trends, anything negative. I know like if you get earnings reports and one stock that's a heavy hitter gets killed, it can totally drag down the entire index. And I'm sure you guys have seen that before as well. All right, so also let me just say this. If you guys have any questions, let me know. I tried to pack a lot of info in here, so there's a lot to cover. But yeah, just let me know if I'm moving too fast or if you have any questions. Um, so we can't talk about the S&P without the VIX because they go hand in hand. Not always, but most of the time. And so the VIX, this is like our fear gauge, right? And so what the VIX was and is it calculates, it's based on the S&P or SPX options, right? So if people are buying puts far out, that's like signaling to the market that, we're expecting a downturn. So the VIX and the S&P are often inverse, but not always. So one of the things I like to do is I like to look for gaps on the VIX, like technical gaps. I like to see how VIX, if it's flagging or if it's preparing to break out or sell off, things like that. And I don't really monitor it all the time, but I will check it for gaps, check for trend lines, just so, the same top-down analysis, any patterns or levels that we can break to help me signal what the S&P is going to do. And I like to just set alerts on those just so my charts don't get super clunky. But one thing that's important, especially with your options, and your securities that are expiring, you've got a range here on the VIX. And so with options, we actually do want to see some volatility. We need movement because they're directional. Not all options are directional, but like your long calls, long puts, like your debit and credit spreads, things like that that need the price to move. We actually do need volatility for that. Because if we're going sideways, then we're actually just paying premium. Now, if you're selling options and you're on the sell side, then low volatility is your playground, right? You don't want price to move because you want to eat that premium up. And that's a whole nother strategy, right? You can do that. But for my directional folks, we want some volatility. So that, below 14, it gets dicey, right? It gets really dicey. Lots of sideways, staticky price action. But also you have the flip side of that, which is, we're, hitting all-time highs, right? Which this doesn't happen every day. But you do get certain times where you get the VIX will spike, and we love that, right? We love that because one, we can hedge our portfolios with the VIX. You can buy options on it. Um, you can buy calls, puts, and trade this against your portfolio, or you can double dip, right? If the VIX is ripping and the S&P is sinking, you can actually take advantage of both of those. So it's just something cool that I like people to understand because especially when there's not a lot of volatility, the premiums look better, of course, because the Vega's working with us, but we need the movement. So we actually do need a little bit of volatility. All right. Okay, we'll come back to this. So this is a chart of, this is from TradingView. We're going to be over there in just a second, but this is actually on top, you've got the SPY. On the bottom, you've got the VIX and the corresponding moves. So you can actually see like that first, this, well, not first, this is like the third one, but this big drop here, that's COVID. 2020. And you can see the VIX spike, that's the all-time high. And then you can kind of see all these corrections as we go. And then here we are. This is from like May. This is old, but you guys get the point. So this is what I was talking about earlier with not necessarily, we're not always going to be trending opposite, right? So 95% of the time, the VIX is between 10 and 44. So again, very rarely are we going to go over 44 below 10. And then 65 to 75% of the time, we're below 12 and 30. And so, yeah, just take advantage of that. And I almost use the VIX like an indicator too. All right, so the options chain, this is just a couple different brokerages and what your options chain actually looks like. But again, um, this session, well, really whatever you're trading, price action is price action. But I do like to cover the options chain just really briefly so you guys understand, how these work. So with your calls, this down the middle, this is a strike, right? This is your strike price. For my style of trading, I am more of a scalper. And so I don't even like to call myself a day trader. I'm a scalper. I'm only going to be there a few minutes. And then I'm going to deal with my long terms, right? So with your strike price, I like to think of it as a price target, right? It's very rare that I'm exercising a contract. So I'm not thinking about what I'm going to have to buy these shares at because I'm not going to be there very long. So, um, yeah, I use it as a price target. Where do I think price can get? And ideally, I want to be in the money, right? I want to set myself up to where if the momentum comes in, realistically, my contract can go in the money, right? Or get close enough to it where I have time to get out and not have to worry about, the slippage or, anything crazy. I like to just lock in profit as much as possible. So, and what slippage is, if you're not familiar, and really and truly, the biggest way to protect yourself from this is look for not indices, look for securities that have a close bid and ask spread, right? The closer that bid ask is, the easier you're going to have a time of getting in and out of your position. When those things are far apart, It can signal, maybe it's not liquid, meaning it's not heavily traded. And it's just going to be harder to get all your capital in and out of those positions. So yeah, just look for the tight spreads. And again, the S&P 500 has amazing spreads. So that's an advantage in my book. But yeah, just think of it as your strike price and then or your price target. And then the strike prices for calls, the strike prices below the actual trading price, these are going to be you're in the money, right? And the deeper in the money you go, the more expensive these premiums are going to get. On the flip side, you're out of the money contracts, they get cheaper, right? And this is something, at least when I was new, I thought this was like a cheat code that I just discovered. I could go way out of the money as far as possible, spend $5, and then we'd see like, a 200-point move. That's not realistic, right? You want to make your trades make sense. So, like I said, I like to at least have a chance of being in the money. Like if we're in a gap, I'm going to keep my price target closer to where the gap ends, maybe even in some. But yeah, we'll look more at that on the actual charts in just a second. And then, yeah, the expiration dates, right? So these do expire. And again, SPX premiums are expensive. So if you have a market that's kind of grinding and slow moving, especially for short-term trades, you want to buy time, right? You want to buy time to hedge against that. And again, I don't like to buy time on SPX because it's really expensive and you still have a high time decay. So if I do feel like I need to buy time to maximize a trade, then I'm just going to switch over to SPY, right? I'm not, I'm cheap, you know what I mean? Like I'm not big on paying $2,000 for a premium. I just feel like that's not necessary to grow your account. So just keep that in mind too. And just like calls, we want those. I don't even say we buy calls if we want the price to go up. Like we want to buy calls when the price is actually going up and the market is presenting that. I'm very big on, and I know I said this in the beginning, but I'm just very big on intention and how we speak because like if you say you're just going to buy a call, if the price goes up, that if can get you clapped in the market, So we want to make sure we're only trading price action that's actually presenting to us. So puts, we buy those when the price is dropping, right? And they're just the opposite of calls. We make money on the way down too. And so these are going to have a max profit. I don't think you have to worry about that on the S&P, but other tickers, things that file bankruptcy, who was it? Someone just filed bankruptcy like last week. I can't remember the company. Um, but yeah, bankruptcies happen and those are opportunities too. So on the flip side with your puts, your strike prices above the share price, these are going to be you're in the money. And you can see these premiums get really, really ridiculous, right? Like $3,000. So on the flip side, your strike prices below the share price, those are going to be you're out of the money on a put because price is moving down. And so with whether you're trading calls or puts, I like to go out of the money, just not too far. So one of the ways that I gauge that is an indicator called ATR. And this is going to be your average true range. And so what this does, usually it's like a 14-day average, but it tells you on average how many points your stock moves. Um, in either direction, right? So SPY and SPX, their ATRs are different, right? So SPX has a high ATR, meaning it moves a lot of points in a day in either direction. So when you have a stock with a high ATR, it actually makes sense. You can actually get away with going a little bit out of the money because your stock has the ability to get there, right? On the flip side, if you're trading like a Ford, right? Last I checked, Ford's ATR was like 70 cents. Um, it doesn't make sense to go out of the money there, right? Because it's going to take Ford 6 months if it even trends in that same direction. So ATR is a really, really cool indicator just to help you get to know your horsepower and how you can maximize on your chain. But also, again, on the chart, I'm going to show you guys how I like to set my technical price targets. And then you can kind of piece it all together. All right, so your bid and ask, again, the bid is what the buyers are willing to pay. The ask is what the sellers are asking for this position. If you are an options trader and you're short term, make sure the spread makes sense, right? Make sure the spread is close enough together. If you're holding longer term, like I call them the Pelosi plays, Nancy Pelosi buys really deep in the money. Her spreads are going to be wider because most people aren't trading and hanging out down there. but they're also parking there. You know what I mean? They're not trying to get out immediately. So there are certain times when you'll see wider spreads, but it just has to make sense for what you're doing for that trade. So your volume, this is going to be essentially how many of these contracts are going to be traded in and out, or if it's shares, right? So volume, you won't have to really worry about that on the S&P as far as liquidity goes, but like trading volume and strength and things like that, that's another animal, and we'll get to that in just a second. And so your open interest, again, you won't have to worry too much about that. That's how many contracts are still open and active. Um, and then, yeah, your high and low, your previous close, that just shows you the history of your contract. Most brokerages, if I'm not mistaken, if you click your strike, you can actually get that. I know you can on E-Trade, but you can kind of see the history of your premium. And then IV, I use a balloon analogy for implied volatility, right? So think about your premium, and one of our Greeks is Vega, right? V for volatility, super easy to remember. And so if the volatility on your asset increases 1%, it increases your options premium by that Vega amount, right? So essentially high volatility, higher premium, right? And then when the IV gets crushed, all right, when the IV comes back to life like a balloon, it deflates, it brings your premium down with it. So that opening range, the first 30 minutes of the trading day, there's actually an IV crush that happens there. So what a lot of traders actually do is they'll go in with that initial burst of volatility, and then a lot of times we start to consolidate, right? We do have trend days every now and then, but a lot of times we have that initial move. Maybe we fade it, maybe we hang out where we left, and we just move sideways for a while until volume comes back in the market and we actually get a direction. Excuse me. So that opening range, you guys, it's a good idea to lock it in, right? If you jump in at 9:30, 9:31, super early, right? Super volatile, just know that there's an IV crush that happens, right? And just by waiting that couple minutes or securing profit, you can actually get a better premium price, right? You can get a better price as the time decay wears down on these things. Um, But yeah, a lot of times people jump in early and get trapped, and then they need this crazy big move later in the day. And it may or may not come, right? So I like the opening range to be like its own little mini trading session, and then I kind of take the rest of the day as it comes. You know what I mean? So yeah, just like I said, always be secure in profits. That's my motto. So you have two order types. You've got your market orders and your limit orders. When you have those really nice close spreads, you can get away with a market order, which is basically you're telling the market, I want to buy or sell this at the first available market price, right? Now, I will say sometimes when these things are on the move, you can get executed at a way higher price or a way lower price, depending on what's going on with the price action. But with these market orders, your price is not guaranteed, right? You're just saying, just get me in there. And then again, they are guaranteed to execute, right? So that can work for you when you have a spread that's within your risk tolerance. On the flip side, you have your limit orders. These are going to let you set the limit price. It's just not guaranteed to execute, right? So the price is guaranteed, but you're not guaranteed that execution. And you can actually get away with these too when you have a nice spread. So your limit orders, if they don't execute immediately, just cancel and resubmit it. And that, keep in mind, that can add time to your execution. So with tickers like SPX, especially with the higher ATRs, I'm really big on just making sure you're proficient at actually executing the trade and like pushing the buttons and setting the stop losses, because there's an art to it. You know, there's definitely an art to it. I highly recommend you practice on the brokerage that you trade on demo, right? Just practice that process of like, this is what I want to do. And another thing I would add is your trading plan, right? As the market is setting up, like maybe we're consolidating in a flag or something. This is when I'm building my trading plan. I'm not waiting for price to break out and then I'm scrambling trying to figure out what I want to do, right? I had a student yesterday, she made her trading plan for Tesla. I think she had like a 290 target, and then we rejected, and then we rallied later in the day, and then her target was hit, right? She actually got an entry right when we came back to that pre-market high, and then she scalped it up, and I was just proud of her because I'm like, yeah, that's what I'm talking about. And I want you guys to be able to see both sides of the market too. just to ensure your profitability on both sides. But yeah, well, I didn't know I had a whole slide on this, but yeah, your trading plan. Before you go in, make sure you have a plan for entry, a plan for exit, and a plan for losses. And I know it sounds silly to say plan for losses, but when you're trading, the only thing you have control over, especially as a scalper, is how much you lose. For us to come into the market and only be there a few minutes and take a complete loss, that's almost like a choice, you know? So we don't want to go for total losses. So before you enter, understand your ATR, understand your potential strike price, right? Where are we going to go? I like to plan for both sides just because you never know what you're going to get with the market. Shout out to Forrest Gump. But yeah, I like to plan for both sides. Also, your budget, make sure you understand how much you're putting at risk. And then your entry conditions. So what are my technical conditions to enter this trade? All right, so for your exits, we want to have a profit target, a price target, profit target. We're not going to stand on that, right? Our technical, excuse me, 1 second. Sorry, guys, my allergies are winning right now. But for an exit, you want to have a target. Now, when I say it's a good idea to have a price target, it is, but price action is going to dictate all of that. So if we lose momentum, if we start seeing, the market flash those reversal signals, we're going to go ahead and lock in profit. We can analyze and see what's going on. If we see a continuation, that's like a whole nother opportunity to hit your price target, right? It doesn't have to be in one trade. I'm very big on like risking off when the market starts to go against me, because you can always go back in and continue that, right? I know a lot of times mentally you can feel like everything has to happen in this one position, but it actually assumes a lot of risk in the short term. So then a stop loss, like what kind of stop loss am I going to go for? A stop loss is, a limit, a trailing, like what makes sense for this security. And then also I like my students to have a loss limit. Like how much money are you willing to lose? And not only like a daily loss limit, but also a weekly loss limit. Like if your loss limit is like 500 and you hit that, it's really good to be able to walk away and say, I'll be back next week, right? Because losses can compound just like wins can. And it's just a superpower to be able to walk away from the market for sure. All right, let's get into these charts. I'm excited. I definitely timed this for two 30-minute pieces. We're on track. All right, you guys. So here's the ES. She was green when I pulled this up, and now we're red. That's okay. Can you guys see my screen? I think, okay, cool. I think I'm sharing. Still good. Okay, thank you. All right, so this is how I prep for the morning, right? So we're just gonna pretend that it's pre-market, even though it's 10:30. And this is how I prep for the market. So the first thing I like to do is I'm gonna jump up to the daily, and I'm gonna go in and look and see where we are, right? So I notice we're below the 50, right? I know we're barely above the 200. We're fighting for our lives here. I see a decline in trading volume, and I see some sellers trying to poke their heads in. Also see RSI hanging out right around 50. So that's not, we don't really have a strong sentiment there. But when I'm going to mark, I grab this horizontal line, and every candle is going to be defined by the candle that came first, right, to the left. So if I'm looking at this guy, this is our previous low, and we're actually poking our head through it, right? Over here, this is our previous high, and we didn't do that, right? We rejected that. So we're really smashed right up on the 200. So this makes for a choppy day. Also, I want to point out what's called a psychological price level, 5,800. The bulls need to stay above that, right? The bulls need to stay above that 5,800. So another thing I'm going to go into, guys, I see a gap here. So we're going to mark that up. And how you mark up gaps, it's just grab the high of this guy, grab the low of this guy. I have my magnet on, so we're snapping to the right places here. But yeah, so what a gap is, it's basically a space in price action where there's no real support or resistance, right? There was a sentiment shift here, and we just popped over, right? So, high probability, not always, and these gaps can stay here for years, but when price comes back down here, there's a high probability that we fill this out, right? Price drops all the way back down to the lower end. So, all gaps aren't created equal. You guys can see this gap over here is from September of last year. We just filled it, what, 2 weeks ago? So they can hang out, right? Gaps can hang out. And just as you go, if you do start breaking down and making new lows, things like that, then always remember to look to your left. Like we have a gap way over here that's at 4,600, right? We're way past that, but they're not always guaranteed to fill, right? They're not always guaranteed to fill. So anyway, enough on gaps. I'm going to fill out the rest of this roadmap. So the next thing I'm going to look for is if we take out this high, right? Yesterday's high, the next level price is going to try to get to is here, right? So I'm going to mark this as a take profit. I call it a take profit, but I'll explain more in just a second. So here, we've got a gap here, but this is our next low. So I'm going to mark this, and then I'm also going to mark this because this is the next low down from here. All right, so, and depending on how frequently you trade these things, you don't have to do this every day, right? Like you can just adjust the previous high and low, but these levels are historic price action. Like we've been here before. You don't have to take this all the way off your chart. So the next thing I'm gonna add here, we're gonna go for a 2-piece. We're gonna do the SPY. Same thing we just did on ES, we're gonna do it on SPY. So I'm gonna mark up yesterday's low. I'm going to mark up yesterday's high. You can see on SPY, we've actually taken out yesterday's low already. We're trading in it. So then I'm going to grab this low here, and I'm just going to mark it as a take profit again. But take profit is not as literal as it looks. All right, and then last thing I'm going to do is throw up SPX, right? Because why not? We're going to do our 3-piece. All right, so here, same energy, previous low, previous high. Yeah, SPX broke it too. I'm not gonna do too many levels to the top right now because this isn't looking too great. But again, like if you're setting this up to actually trade, especially like on a Fed day or like a day where there's crazy catalysts like earnings, you can do more levels. But for our purposes, we don't have to do too many. All right, guys. So I've got a couple things up here. I've got a 50 EMA, or is that an SMA? Let's see. This is an SMA. That's okay. I've got EMAs over here, but basically what your moving averages do, they smooth out price action over a set period of time. Oh my gosh. They smooth out your price action over a set period of time. So on your simple, right, the SMA, this is going to apply equal weight to all of the days, right? And we've got a 50-day, which is the white line. We've got a 200-day, which is the purple line, right? The dark purple. And then over here, you've got the EMA, which is also smoothing out price action, but it's putting more emphasis on the most recent price action, meaning it's going to update a little faster. So I'll keep them up just for learning so you guys can see the differences. But for short-term trades, your EMA is going to be more, that's my preference for short-term trades. I like the EMA because it moves a little faster. So you guys, the first thing I want to point out here is this death cross, right? You've got the 50 crossing down below the 200. That's bearish sentiment, right? The 50, this is like our anchor, right? The 50 is telling us what's what. So the bulls, they like price to be above the 50, right? The bulls also like to be in a golden cross, meaning they like the 50 to be above the 200, right? So when we trade, let me turn this off so you guys can see. I'm going to open this up just a hair into yesterday. So this is, let's see. There we go. So you guys can kind of see yesterday we were in a golden cross, right? We went up, 50 came back down, we went up again, but notice how we tapped twice on the same level, right? And I know this is a smaller time frame, but that's a resistance, right? That's a resistance. So you can see this is like the bulls, retried this, but overnight, again this morning, we failed to take that out. That's like this right here alone is 2 taps. That's enough. But the failure here, and you can see the moving averages converging down. Even here, like you can see they went for it again and they just couldn't do it. So now that's triggered some sellers to come in and try their hand at it. So notice though, this is why we draw the roadmap because it gives us context of where we are. But we're trading above yesterday's low. Like we took out yesterday's high, we cut through that like butter, right? And now we're chilling on yesterday's low. So you can see the buyers in here trying to fight back. We just don't have the volume, it looks like. But this is important, right? Because if we take out yesterday's low, that starts supporting, right, our downward movement. And that starts supporting like, hey, we've got a death cross. We're below the 50. We're below the 200. We're taking out previous lows. Like all these things are bearish, right? And throw in like a negative catalyst and now we're cooking. Like that's all we're looking for here. And again, this, like I said, this right here, I'm going to trigger this low. And this is on the ES. Um, yeah, this looks bearish to me. So over here on SPY, same energy, right? Same energy. I like to have the ES on like a 2 or 3 minute time frame just so I can like eyeball volume over here. But like I can see where, the bulls are declining. You guys see this buying volume declining. You can also see a little pressure here. Over here, SPY has already broken yesterday's low, right? We don't have, any volume much at all right now, but we're struggling to reclaim that. That's bearish, right? Same on SPX. We're struggling to reclaim a previous low that is bearish. So I'm not even thinking about upside opportunities at all here. I'm only looking for the sellers to step in and push us lower. And then these upside trends, these are going to be countering the overall trend. So you don't want to trade against the market, right? You always want to trade with the market. So this is my watch list. Like this is actually this is my coaching chart, but it's like a spitting image of my chart. So up here, I like to watch the Hang Seng and the Nikkei. Also crude oil, the Russell, the Dow. You see the NASDAQ right here, right? Together again. So these two I'm constantly eyeballing because when the NASDAQ moves a lot faster, right? So if the NASDAQ starts slipping or, ripping, whatever it's doing, that helps me. That's like an indicator for this guy because we know we're heavily weighted in tech. Um, so SPX and SPY, of course, are at the top with Qs. I've also got the DIA, IWM, because sometimes the Dow is fun, right? I'm not gonna sit here and be like, I don't like it. I trade, the Russell, all that, but the SPY is just like, I don't know, it has a special place in my heart. But we also have our VIX. So like, I'm gonna jump on the VIX for a second and Bitcoin as well. I use Bitcoin as well. So let's go. I don't know, let's just look like a 15 on the VIX. So if I'm looking at the VIX here, you guys, we hit support. The VIX hit support and bounced, right? And that coincides with this drop, right? So I noticed we have the stages of the market, right? You have your accumulation, your uptrend, your distribution along the top, and then your downtrend, and you go back into that accumulation. This right here, we went off a cliff and we found a base, right? We tapped this 1, 2, 3 times now. So this is something I want to keep my eyes on because if the VIX takes off, that's not great news for the bulls over here, right? So we definitely want to know that. I don't usually have the VIX up on my chart like by itself, just because it takes up extra space, but you can actually add it on your chart as like an indicator. So like, I will do that sometimes, just like pop it at the bottom, just so I can pay attention to like any spikes or anything that are coming along with that. But so the next part of my watch list, this is something you want to update periodically. You don't have to update it a lot because like I think the top 25 are on here. Maybe the bottom few will shuffle around. These guys will shuffle around, but they're very much the big dogs. So like even if they slide down a slot or two, these are the biggest ones that I like to see. So you can actually see today, a lot of these are pulling down. Not all of them though. Like we have a mixed bag. And so that can make for it harder for us to move in one direction with clarity, right? So that's just something to be mindful of. And then last but not least, here's our spider ETFs, and you can see really easily like what the sectors are doing. It looks like uh, not consumer discretionary, tech is getting cooked. Um, and there's some other things moving, but again, there's a couple ways to see the same information. So like you don't, like I say, I tell my people, you don't have to know everything. You just have to know enough to make an informed decision. But you definitely don't want to fall into like overcomplicating things, anything like that. Do you guys have any questions? I know we've covered a lot here. I'm gonna take the VIX off, and I'll show you guys the ATR as well. Um, Take this off. Okay, VIX wants to stay. That's cool. So let's look at ATRs real fast. I'm gonna pull up SPY, and then I'll also pull up SPX just so you guys can see the difference. And I really want this off. There we go. All right, so ATR, average true range. I use it on the daily, so you can see SPY's ATR is 8.81, which is decent, right? Um, That's decent. Like you can make money with that. And again, it's not in one direction. And so this is not like a hard rule, but like if your ATR is 8.81, I kind of like to stay within half of that for my strike. So like I'm probably not going to go more than 4 strikes out on this. And again, that just keeps you from being too far out to where your stock can't actually get there. And if you do feel like it can get there, you just want to buy more time on your contract or come closer to the money, right? To offset that time. And so down here, I'm going to go back to the 1 minute for a second on SPY so you guys can see this too, right? So here's like a rejection, right? We came down, we broke the 50. Here's the sellers. So if I were to see something like this, right? I see this 50 converging over towards the 200. That's bearish. This is going to be like my first price target, right? So like this previous low a day, that would be my first price target. You've actually got a pattern in here. Um, I would almost give this like a descending triangle, maybe a bearish pennant, I don't know. But there's 2 trades here, right? You've got this guy and then you've got this guy. And so this right here, though, if I were to take something like this down, this would have been my first price target. And you can use that 573. That's a strike. You know what I mean? So like, you don't have to overthink this. Like it could be a 572, 574, just somewhere in the ballpark of this first target, right? If you were trading this up, again, I'd be looking around the 576 strike, just because you want to have that opportunity to get where you're trying to go. So like on the flip side, this was support, 20 minutes ago, and now it's turned into resistance. Y'all see that? So now this is again, um, we need selling volume to confirm that, but overall, we're getting these lower highs. So let's see. We're still below the 50. Our next level down is this 570 level, right? And that's another psych level. But if the sellers come in, they may go for this gap. I don't know. They may very well go for this gap. We have GDP tomorrow. But I also want to point this out. Let me go. I'm just going to look at SPY by itself for a second. Because I feel like I'm just talking through what I would be looking at if I was trading this. But so if we zoom out, you can see like we went up, there's our uptrend, right? There's a little distribution, right? There's our range, and we've broken below this range and turned this into resistance. So like our next area to really watch for is right in here, because this is a short-term support, right? We've got some lows down through here and everything, but altogether, I think this gap, it looks pretty. So we'll see if the bears want to pick it up here. You can trigger this low so you don't have to stare it down. It's like, hey, let me know if this happens. You can trigger the gap, like let me know if this happens. But like one of my favorite quotes I ever heard anyone say is you can't make all the money. So when I trade, I don't go in the market with that mentality that I have to catch everything. It's not Pokemon. So I just try to catch something and add it to my pile. You know what I mean? I just want to catch something, and the biggest thing is just being able to identify opportunity and being comfortable enough to lock it in. But trading it doesn't have to be super complicated. Like you don't need 100 indicators. You really just need to have a good read on price action, a good read on strength and volume. And then these guys, These are like your backups, like your MACD, your RSI. They're just there to back you up. Like if I see bearish sentiment up here, I want to see it down here too. Um, but like we can see here it's pretty clear what's happening here. We also have like trend lines we can watch. I'm just gonna draw it through here. Um, but yeah, and it's just a patience thing. It's just a waiting game. It's almost like it's revving its engine up and I don't know. We'll see which way it shoots off, but until we get over this trend line, even really until we get back above this previous low of day, I would not even be thinking about any upside here at all. Because that's just bearish, like that's just bearish sentiment altogether. Um, but yeah, and then of course, if we start taking out highs, we just flip this on its head, right? If we start taking out, we get back above this, this is supposed to be my high. But yeah, it's I don't know. I don't want to oversimplify this. But trading does not have to be hard. And you guys can see here too, like this moves a lot slower than the SPX. And it's a really, really cool way to get your feet wet in the S&P. But no, I don't know. I don't have any. I'm trying to think if there's anything else. I mean, there's a ton to add. I just don't know that we can cover it in a timely fashion. But yeah, just make sure with the SPY and the S&P, stay on top of your economic reports. Those are market movers. We post the calendar every week. I tweet the calendar every week. You can find the calendar anywhere, right? But just make sure you're aware of like your big report days. At this point, I pretty much only trade when there's some type of catalyst, just because there's so much chop in the market. And I just really appreciate when we're all on the same page and the market can just trend. And that doesn't happen every day. Statistically, we consolidate more than we trend. And so this is why I don't like, I don't want to throw shade, but this is why I don't consider myself a day trader because like holding something that expires in a short amount of time in a market that doesn't trend that often, it's just a recipe for disaster. So yeah, I'm very much give me my money while we're on the move and then I'm out of there. But yeah, that's all I have, you guys. I hope this was helpful. When I timed this, it was definitely an hour. I think my nerves got the best of me today, but that's okay. But I'm happy to watch this with you guys. I'd be watching this anyway. If I wasn't on live, I would literally be sitting here doing just this. So I'm more than happy to watch this with you guys. If we catch something, that would be cool too. Let me pull up.
Do
Oh, go
you want to
ahead.
maybe look at some symbols? Maybe the audience has some
Yeah, for sure.
symbols they want you to look at. So, yeah, just go ahead and if you have a stock you want, okay, YM.
Got some downloaders. I love it. Let's look at it. Let's see. Okay, so the Dow right now, one thing I noticed, the first thing really I noticed is that we're in between the 50 and 200 and we got like a decline in volume. So we are green today. But I want to look and like investigate a little more on this guy. Let's see. 4 hour coming up on the 200. I'm going to trigger this 200 because if we can't make it over that, then I definitely don't, those rejections are nasty off the EMAs. Um, okay, I'm on Zoom. This is what I mean. I'm gonna set an alert on your 4 hour on the 200 because we're dangerously close to that. And also we've got a lower high here. Look at this volume, MACD, RSI, like this looks a little scary in the short term again, but she's flagging a little. And this is all the way down on a 5, but we are holding a higher support. So that I'm not mad at. I'm gonna throw up a trend line here just to see what happens. But I would say just watch that 200 like a hawk on the Dow. We took out the previous high. Um, but this is our next level up right in here. And mind you, it is like early in the day, so like just as something you want to monitor and check on later in the day too. But like this is our next high. It's like 43,196. And then you have a little area, a little room to move. But I would just keep your eyes on this because if we lose steam and reject here, it could actually be disgusting. But just yeah, keep your eyes on that throughout the rest of the day. 5 minute is such a small time frame, but you do have a little bit of a flag in here. I'm not mad at this. As long as we can stay up here and keep consolidating, I'm not mad at this. Okay, good. I'm glad you guys got some good information. I was like, they're gonna hate this. 200, would you still use your LOD and hide it? It depends on your trade. It depends on your trade. Like if you're looking at this are you looking at it for like a day trade or are you like holding this? Not, I don't even want to say day trade, like a swing. Yeah, so a swing, ideally, and I'll show you an Amazon example too, but ideally you want to make sure you're staying above these highs, but you want to make sure we're holding them throughout the day. So like if you look at like Amazon, for example, yesterday, Amazon started losing steam. It literally retested yesterday's high right near close, but like it looks super weak on the daily, and then it went off a cliff. You can see like we opened up, you see that? That was yesterday's little flag. We popped right above this morning, and then we just got weaker. So that's why I'm like, just keep your eyes on this. But if we have like a weak close, and we're closing like near this guy, because this is our take profit level. We're not too far off from him. And then we have this. But yeah, just monitor this. We may go for this today, right? We could definitely do that. But you want to make sure you're continuing to move up and you're getting these higher lows. But like if we reject something and we start moving down, taking out lows, it's over. Like I wouldn't ride that out. I would not ride that out. But yeah, you've got your golden cross here. Again, this is short term, but I'm not mad at this. The Dow is the only one actually today that makes any sense. Yeah, just one of the things with swinging is you want to swing into strength. So like if there's any type of like question of, is this still strong? The answer is get out. Just lock in profit because you can always reposition. Like look at this. This was what I was telling him yesterday. Amazon, let me go back to the daily. But yeah, Amazon went up, but look at the volume. Like we were declining on buying volume. And then this morning we literally went off a cliff. So I need to check in with him to make sure he got out of that. But yeah. And there's also a gap here too, you guys. But no, I'm not mad. The Dow looks okay short term. You can see they're still trying to push this. I think I put an alert on this as well. Yeah. See, any other tickers, you guys? This was fun. Thank you so much for having me.
Do you have any thoughts on Palantir? That's one of my
Oh,
favorites.
yeah. Let's check. Let's jump up to the daily. See, she's consolidating here. Got a nice bounce over this 50. There's a little gap in here, not too crazy. Let's see, I think we've got a gap in here too. This is a good one. So a lot of times, you guys, if we're stuck, if we're wedged between a gap, it can get really like cutthroat in there. It's like a dog fight. I do like the rounding. So I'm wondering if we get like a little cup action here. Let me jump down real quick. She's really wedged in there. Do they have any, let's see. They don't have earnings anytime soon. The Bulls are fighting back on this thing too. I feel like I'm a little biased. I love Palantir. But the fact that it's holding up here, like it's the Bulls are defending this 50, like, yeah. I'm not mad at this. I would keep your eye on maybe this is short term. I don't like this top here. It's 2 days and we broke down today, but I'm wondering if it's just because the volume's so low today. Like when there's low volume, there's nothing in the market to absorb something like this. So it just looks extremely dramatic. but the buyers are holding this up. So I would give this a little time. Make sure you don't break any lower here, but we're actually still in a range like we've been here before. And this is super short term.
Okay, great. Someone also asked about Chewy, CHWY.
Let's see. Jump up here real quick. Chewy's between, I hate when prices between these moving averages because it's like literally like a dog fight. You got a bearish engulfing on here though. Yeah, you see how we took out the high and low of yesterday? That's not great, but uh, I would wait, watch this today. Chewy, I don't even think has a high ATR. Like I think the ATR is like, let's see, it's 1, right? So this is one you would definitely want time on if you're not close to the money or in. But yeah, this is a little indecisive, honestly. It's wedged between two of these, and you've got a bearish engulfing, and you've also got buyers stepping in down here. I think this needs some more clarity for sure.
All right. Oh, did you do SoFi, also FI?
Oh, gotcha. I didn't even see that. I'm sorry. All right, SoFi. Let me go back up here. Ugh, between the 50 and 200. That's okay, guys. So we have a little gap in here. I think we're taking care of that today or trying to. Yeah, she's in the gap. So I would say right now, your next target down is that high of this candle, which is 1291. Um, so I can market take profit there. Because we actually are in that gap. It started way up here. And then for your upside, really and truly, I wouldn't worry about upside until we can at least get back towards the high of today. Let me go down and see where we're at. They're trying to bounce it. We got a partial gap fill. Uh, I'll trigger this too. Like the what 1305 is our partial. But you can see this thing is kind of stuck too. We're making new highs in the short term, but like I would like to see this back above the high of the day if we're talking about a reversal here or a bounce. We need some volume in here to push this guy. We had it and we lost it. Story of the market.
All right, great. Thank you.
Thank you so much. Yeah, I just triggered the low of this candle, that 1305. Sorry, I know I move fast. But yeah, the low of the day. Because we're in a gap. It's a partial fill. So like we've already started this. We just didn't finish it. But yeah. Thank you guys so much. I hope the rest of the day is amazing.